Morning, everybody. It's the 10th of May. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Good morning.
All good?
All good in the hood. Sun is shining.
Yes.
The rain has stopped. The rain has stopped
Well,
officially.
it's looking pretty moody outside.
Is it?
Here.
I mean,
Yeah,
I've got.
bit grey.
If I look at one window, it's a bit grey. If I look out that window, it's a bit bright. So
Okay.
I'm just going to face forward.
Yep, absolutely. Okay, so let's get stuck into it then. So last week, obviously in the UK, we had these elections that took place, and the Scottish Nationalists failed to win an outright majority in the country's devolved parliament over the weekend. So there is fresh fears that there will be a second referendum for independence in Scotland. Obviously, there was one last, I think, in 2017, maybe, which obviously didn't go through. Elsewhere, it was pretty bad for Labour. They lost quite a lot of ground in the mayoral elections. They did all right though. So we've got is it Andy Burnham and Sadiq Khan both keeping their seats. Aside from UK politics, there was only 2 deaths reported from COVID-19 yesterday, with now a third of the nation having been fully vaccinated, for the adult population, that is.
I was going to say, I thought, yeah.
High number. We got obviously the green list for the UK as well. A couple of places that we can go travelling to without any need to quarantine. So I think Portugal is going to be infiltrated with Brits in the coming weeks and months. Israel is another place that we can go to, as well as Greenland. Was it? No, not Greenland. Iceland, the Falkland Islands.
Mm-hmm.
Fancy a trip there, Steve?
What about Ireland?
No, that wasn't on the list, I don't think.
What?
No, I don't know if that's part. I don't know.
Yeah, that's ridiculous. I mean, we can go to Northern Ireland, obviously, can't we?
Yeah, I think so. Yeah.
Or Scotland or Wales. So we can go to Northern Ireland, and I don't think there's any restriction going from Northern Ireland to Republic of Ireland. That's lovely there.
Maybe.
And not far to travel. But,
no, I got my text through today, so I'm next up for a vaccine. So that's coming around. Yeah.
What is that? The sort of like 35-year-olds upwards or something then?
Yeah, below 40, I think.
Oh, okay. Oh, well, anyone below 40 up until 18 or something. I don't think they're doing children yet, are they?
No.
Right.
No.
Okay.
And my wife's got hers on the 20th as well. So yeah.
Brilliant.
Next step.
Welcome to the end of the world.
Yeah, exactly. Okay, what else we got? So Dogecoin, originally conceived as a joke, is now the world's fifth largest or most valuable cryptocurrency, but it plunged from an all-time high after Elon Musk jokingly called it a hustle on late night TV. And that crashed the price a little bit, which we may have a look at if we get time on the charts today.
Yeah, okay.
Crude oil and gasoline rose at the start of the week. There was a cyber attack that put the largest oil producers pipeline in the US out of action. So that's quite interesting. And on Friday, of course, we had non-farm payrolls, which came in much worse than expected, yet we saw a big risk-on move. Do you want me to explain that one, Steve?
I'll tell you what, if you can, yeah, but it just... I don't know where to start. It infuriates me, but anyway, if it doesn't infuriate you, explain it.
It does infuriate me, but this is what's going on. So the number came in worse than expected, which means the economy isn't doing great, which means you'll get looser monetary policy from the Fed. They'll continue to keep interest rates lower for longer, which means risk on, basically.
Yeah, so more debt, more sort of like when it comes to that capitulation, it's going to be harder and heavier than anything we've ever seen before.
So bad news is good news.
Wow.
That's pretty much been the case, hasn't it, throughout the pandemic?
Yeah. Can't wait for the good news. Just tell everything.
Well, yeah, when the good news starts coming, then you need to start worrying.
We are in trouble if the good news comes. Just keep hoping for bad news.
Yeah.
That's, if you're long of stocks and indices and everything.
Seems that way.
Wow.
Right, let's get stuck into some charts then, shall we? I'm going to go up first with dollar index. So
yeah, let me know what's going on. It's collapsing the dollar.
Yeah, so I was sort of the opinion that having broken out of this channel with this bullish candle that we posted on the 30th, having found support at this 78.6% fib level, that it was all going to start looking a bit rosier for the US dollar and we were going to start ticking higher. Then we get the non-farm bombshell. dropped on the 7th, and we saw a very negative candle, a close below the low of the low that we posted on that 30th of April. We've also closed below the small trend line, upward trend line that we had there. Bit of a try and fight back today, but I think it's maybe a case of giving up on the dollar index, having formed a bottom for now, and it's going to be a continuation of risk on by the looks of things. Or is this just a big fake and we're going to, sucker in a load of people here before rallying? Just don't know, but it doesn't look good for the dollar index based on that chart. So it would be a case, I think, of looking to sell rallies.
Yeah, I mean, the longer term chart, the weekly chart doesn't look clever at all. So I think from that perspective,
let's have a look
you've got to sort of, have a look at the weekly. I mean, it all stinks a little bit. Even bring it in a bit further, Joe, just to sort of like, just to give us a overall idea. It's really sort of pressuring this previous swing low at 2018 for me.
That's got to be the natural target, hasn't it, now?
Yeah.
I mean, you could argue, I suppose, that this is actually just a flag, and what we're getting is a continuation.
Yeah. I mean, we've had this maybe a 5-wave impulsive move lower, and then we've had the correction possibly. Then that leads to another 5-wave, which is the start of a bigger third wave down.
Yeah,
that's sort of like the things you can see on this. I don't know. It's doesn't feel too clever.
No, definitely not. So on the flip side of dollar index, we often look at euro dollar. Let's have a look at what that's doing today. So I've redrawn the trend line on this. Actually, I was thinking that maybe a head and shoulders was starting to form. I'm not totally giving up on that yet. It needs to overcome this resistance here from the 25th of February at 122.43. But it doesn't look good for euro-dollar bears. Really impulsive move to the upside on this week and on-farm number. I did have some resistance drawn in here at 121.56. Yeah, big uptick in volume as well. It's stalling into this resistance now, so there is potential for it to stall a little bit here, given the strength of these sessions that we've seen over the last 2 days. But overall, looking pretty good on that. Cable was quite interesting because it's broken above this range that I've been talking about previously at 140.00 to 136.70. So we've broken that range quite convincingly today. It didn't happen on Friday, actually, when we had the big non-farm miss. It's only happened today. So maybe as well, let's just get rid of this. Well, actually, I'm not going to give up on this yet as well, because we've got the sort of trend channel. So maybe we'll get a reverse touch on that somewhere up here into this resistance level here. But from a range perspective, you could argue that we may see a measured move higher up to this sort of level, 43.45, which would all sort of measure up, with previous resistance and maybe an underside touch of this broken channel. Who knows? What else was looking good? Euro sterling. So there was potential for that forming an inverted head and shoulders, but that's doing its best to reverse that today. If it takes out these lows here on the 5th of May, then may invalidate that potential setup. What else was I looking at? Dollar yen is still looking the best option to play the US dollar if you want to retain any bullishness in there at the moment. It's trending higher still, bit of a pullback to the trend line. Buyers have got back in so far today, so maybe a chance for a continuation higher, just showing how weak the yen is really, even though the dollar is continuing to be weak as well. Dollar Swiss, that's breaking down, trading in a bearish channel. No real signs of slowing. The next support isn't down till 89.10, so continuation lower expected there as well. So all being obviously driven by what's gone on with the dollar, and that's not looking particularly great, given that we saw this big miss on non-farm payroll, which typically would be a thing that you would see people flock to the dollar for as a safe haven. But in current environments, it means that we're going to see looser monetary policy for longer, and therefore bad news is good news. make sense of that if you can. So I'm sick of talking about that. Steve, you can tell us what's going on with the indices and metals and maybe a couple of cryptos.
Yeah, right. Looking at the oil first. Oil, schmoil. Positive week last week in oil. We're back up in towards this key resistance area, really going back a fair old shout. 2019, 2018. We've sort of like struggled to get above these levels. However, it's looking pretty positive going in, and obviously, as Joe mentioned, that cyber attack over the weekend has led to a decent gap open on the charts. This is the hourly chart. I was talking about this last week, pretty bearish of this into the end of the week with this head and shoulders formation, which I thought looked quite nice, but it's rejected it quite aggressively, taken out this, we had this, the throwback, and then the sell-off. I was thinking, this is it, this is the one to get on, and then all of a sudden we've had the pullback completely. So really looking at levels around about in the WTI 65.90, a break above that would clearly invalidate this whole formation. Looking on the daily chart, Friday's price action posted a bullish hammer, quite nice, after the bearish dark cloud and the three sort of negative days. The third negative day turned everything around, so it's looking pretty positive. Looking for a bit more of an uptick there, so positive there. Dollar obviously on the back foot, so that will help that playing out. On the gold, look at the weekly chart first. This is the long-term view. I expect we will be going higher long term. There's my target area, 2500. But we're in this flag formation, and obviously last week was a pretty resounding day, best up week we've had probably since July 2020. Looking at the daily chart, we've taken out the 50% level, which was coming in at 1817, and obviously clearly broken the 1800 psychological level. Still potential for, I'd like to see a retest of that level before I get carried away with these blue skies that we're seeing in gold, but plenty of resistance to consider further up. Now, we had this double bottom formation, which we highlighted weeks and weeks ago, and the measured move target for that, as we mentioned last week, was 1835, and it's clearly got there and stalled ever so slightly. Obviously facing tough resistance at 61.8 fib retracement level, and these previous, well, we go back to here, August 2020, September 2020, November 2020, where we've got this supportive level coming in just below the 1850 level. So for me, that's the next level to retest. Got close on Friday, but didn't quite make it. Today, it's off to a bit of a slow start. Waiting to see where the dollar takes us. It's a very dollar-driven move for me. So also, I will mention copper. I mean, copper is the best performing base metal since 2020. I did, let me see if I can get that chart up, which I had earlier. How's about those apples? Base metals relative performance since Q1 2020. This is thanks to Refinitiv. So this is who's produced this chart, and we can see it's like based on a 100 level. So from the pandemic, this is how it's performed. Copper clearly up at 214, and lead has sort of like struggled along, but they've all been positive, and that's a sort of cycle we're in, these base metals being supportive. So it gives us a good idea of what we're doing in the economic cycle. So yeah, nothing slowing that down. I mean, let me get the futures up, because that has a little bit more historic price action in it. And let me get the weekly up. I mean, this is what, this was the double bottom we talked about. How long ago did we talk about this? I mean, ages ago. I haven't looked at this chart for a while. And the double bottom target was a swing back to 465. We've taken that out easily and cracking on. I mean, this chart goes back to all the way to 1989. So can we say it's all-time highs in the copper? Why not? I think the equivalent, record highs above 10,000 per ton. Obviously, this isn't a per ton basis, but yeah, really like the copper. Let's look at indices. Again, seem to sort of like just keep going and going and going. All-time highs in the US side of things. Not quite the same over this side of the pond. We've got FTSE breaking up to obviously a not quite. Obviously, 2020 high is 7,683. We still got a long way to go to get to those levels, and obviously with the dollar under a little bit of pressure. Maybe this is going to be, we might see the FTSE running out of steam first. DAX is 4-hour chart. We've looked for a head and shoulders here, got the sort of move going, and then complete reversal. So that's taken that out. But however, we must look at the previous head. That's around about 15,500. For me, that will be the next big test for DAX. Dow Jones, I don't know if there's any more tests to do on Dow Jones. It's just on and on and on and on. So just extending higher, completely ridiculously, but what can you do about it? Let's take it back to even these sort of levels on the MACD. On the obviously we're seeing sort of like huge, oh no, let's even take it back to here. Bearish divergence on there. I mean, we're going back to March 2020. It is bearish divergence still. I'm not looking forward to when that comes crashing down, but you know, you've got to stick with it while it's still looking hot. Even the sort of tech sector had a little bit of a reprieve. Double bottom formation here. We've had a throwback. So looking at this, the bottom here, and then we draw our neckline here, and then we say, right, where is this potential for this chart? Well, it's funny enough, it's right back up at these swing highs. So around about 14,000, NASDAQ looks potentially like it could go there. We've had the break up through the neckline, the pullback, and the pullback has been supported by the neckline. So potential for this to continue. S&P and Dow Jones obviously will do their best to drag their little tech cousin up. On the obviously commodities very strong, leads to an Aussie 200 very strong. So again, we've had spikes higher this morning, very positive. Support coming in for this at the previous high. Oh, Mum, you can't call me during the day. This will be the supportive line 71.25 in Aussie 200. I like that. And 4-hour chart on the Nikkei, again positive, bit of a supportive area here coming in and reacting higher from here. So looking quite good there. China though, China for me is the one, I keep saying it, and I don't know why, but I really sort of feel that if we do get a proper breakdown in China, which we are seeing, I think, a break below 16,445, this could be the catalyst that sort of like wakes everyone else up. You know, let's stop getting carried away with everything. God damn it. I mean, even cryptocurrencies, look at them. I mean, obviously, weaker dollar would make these more valuable because it is based against the dollar. So, you know, weaker dollar, higher prices in crypto. We're looking at Bitcoin here, and this area of resistance seems to be sort of doing the job at the moment on crypto. But because I'm sort of thinking we're still in a potential corrective mode where we have the impulsive move higher, now we get the correction. and the correction will look something like this. Let's get the right correction A, correction B to C. That's the sort of thing I expect to see. So I'm still a bit negative on Bitcoin, but you know, it is a bit of a beast on its own. So you know, I'm jury's still out. 60,000. If we get a decent close, daily close above there, I'll start to sort of like second guess myself. Obviously, 65,000 is the all-time high, and again, dollar weakness, you know, should sort of like lead to a move higher. Is it Doge? Is this Doge? Yeah, it looks like it. So yeah, thanks very much. Thanks very much, Elon. This is obviously what we've seen from them comments. Decent sell-off, and I suppose you've got to look at this level as maybe a bit of a key pivotal level around about 52. But spiked up. You know, this is a nice recovery. This is a morning star formation, recovered well, but hasn't kicked on. So maybe you know, growing a bit tired, but MACD is sort of like saying the bearish momentum is stalling. So maybe it's just a little hiccup in the natural progression of these cryptos. That's about it, Joe.
Lovely, thank you, Steve. Okay, so gun to the head from Friday. Let's have a quick look at that. Nothing to shout about, unfortunately. I went long of dollar index, which obviously was smashed on the back of the weaker non-farm payroll numbers. And Steve, you went short of oil. Managed to cling on there to without getting stopped out. So that was a 0.14R loss, which definitely isn't terrible given how much volatility there was on Friday in dollar-linked products. So all good on that front. What are you fancying today, if anything, or would you like me to have a go?
I'll have a little bash at oil again, to be honest. Obviously, we've had this spike up based on a cyber attack. Once that's sorted out, then it'll be normality resumes a little bit. Maybe we'll have a pullback to fill the gap. We've definitely started off looking like that. But I'd like to get involved and sort of like try and take a quick turn out of it. 65.8. What's my line at? 65.18 trading. And yeah, well, what about 64.18, 64.28? Let's do a quick sort of like 30 tick risk on this. Actually might go 25 and 100, and then we get a 4-to-1 risk reward. Why not sort of like have a little bit of a hoo-ha like that? So yeah, getting short at 65.18. The stop is at 65.43, so it's a 25 tick stop, and the target is 64.18. So thinking once they sort of like get their heads around the cyber attack and say, oh, it's not the end of the world, maybe have a bit of a pullback. Because
when did that gap occur?
That was the Friday to the Sunday open. So it's like, you know, obviously the cyber attack happened in between there. I mean, when it was here, it was still, I mean, that's forming a little bit of a bullish flag. So, you know, a little sign it should have popped up. It's popped up. But yeah, just looking at the 4-hour chart, doesn't look great. These candles don't look great. You've got a sort of like, obviously a positive gap open, positive candle, although it didn't quite manage to hold on to the highs. Then you've got this almost bearish engulfing hanging man looking candle and a shooting star candle. So for me, there's good reason for it to maybe fill the gap.
Yeah.
Anything more than that is a little bit of a wish on my side of things, just to get my trade idea right.
Okay. Right. Thanks for that, Steve. I'm going to take a look at Euro Sterling. I was of the opinion that this was forming a nice inverse head and shoulders. It's not doing it in a textbook fashion at the moment. We did see a nice push up on the 6th of May, bit of a doji posted on Friday, and we've backed that up today with a bit of selling. But if you'll notice, we are bang on this support level here, which is at 86.23. So it's, for me, I think, make or break here. If it's going to work, it needs to work right now. So from a risk reward perspective, we can have a look at a tasty little setup. This is the intraday chart. So we're down here at 86.30. I'm just going to have a 15 tick stop on that today, because if it does break below these lows here, then don't think it's going to happen for me today on that one. But going to look for an upside target of around about 80 ticks. So 87.10 is the target. Looking for 5.4R on that one today. Highly speculative, as they all are. You know, we are making calls with effectively a fake gun to our head, and we've got to make a call right now. So that's what I'm fancying today.
Cool.
Okay, what's going to move these trades today? Well, probably not a lot. We've got Eurozone Centix Investor Confidence, which is due out at 9:30. That is ranked as medium in terms of impact on the calendar today. And we also have a Fed speaker, Evans, later at 7 o'clock tonight, again ranked as medium. In terms of earnings today, there's a couple of COVID vaccine makers that will be watched. BioNTech and Novavax will be reporting today. That's pretty much it. So fairly quiet start to the week on that front, but obviously plenty going on off the back of the weekend on-farm payroll number on Friday. Yeah, we'll see what the rest of the week brings.
Excellent.
Cool. Well, have a great day, everybody, and we'll be back tomorrow morning.
All right. Cheers.
Cheers. Bye.